If we can make the pie bigger, humanity wins.
And it goes to diversification is key. You need to think in scenarios. In a world that is changing so rapidly.
I think you're starting to see growth opportunities in markets like here in China, other markets.
当美国证券市场结束10年长牛，全球资本正在经历有史以来最大规模迁徙。美国关税冲击下的不确定性，中国两会5%增长目标的政策定力，香港 H 股的技术性反弹，生成式 AI 引发的生产力革命，这些要素正在重构21世纪第3个10年的投资版图。
First thing first, at the beginning of this year, the broad consensus is something called American exceptionalism. But just 3 months in, obviously the American market is not that exceptional. And quite interesting, the best performing market is Hong Kong H shares, especially the tech index. So what changed? Do you see this coming?
I don't think any of us saw what's here now coming in its current form. But I would say we did see the U.S. economy starting to slow. You had the Fed, who was in a tightening cycle. They were raising rates, and we were waiting for them to start lowering rates because we thought the U.S. economy was going to slow down. But I do think you've seen geopolitical tensions as it relates to trade uncertainty start impacting markets. And I would say, particularly in the U.S., what markets don't like is lack of clarity. They like clarity one way or the other. They just like to know which way is the economy going. And I think this uncertainty is really caused a lot of pause in that market. Well, none of us really know what will happen, and I can't really speculate of the outcome. I think what's important, though, is to understand the potential outcomes for investors and really try and give them that breadth of solutions and understand how do you diversify your portfolio? How do you maybe shift some of your allocation if you were heavy in the U.S., particularly because of the outperformance the U.S. market has had. I do think you're going to see some investors want to take some of that and diversify outside of the U.S. Yes. I think you're starting to see growth opportunities in markets like here in China, other markets. London is another good example, Europe.
You mentioned a very important capital shift. The better return market this year is Europe and China. Do you see this trend is something sustainable?
Yeah, I do think a lot of that will come back to the demographics and the growth of the economy. So markets are different than the economy, but a strong economy is typically good for markets. I do think what we've seen and what the government has done with the 2025 2 sessions around just the commitment to growth, trying to provide broader support for the consumer. You talked about the rally in the H shares. A lot of that is driven by tech, by Gen AI and the hype around that and some of those companies in there. But I do think a more broader-based recovery that involves the consumer, I think is going to be required to sustain a bigger rally. But I think as that confidence comes back to the market, particularly for local investors, I do think you'll see more money come into the market for that.
So given the particularly uncertain global context, do you feel that at least China is a source of stability, a source of certainty in this world?
Whether it's in the United States, it's in Europe, it's in China, it's in the developing markets, the entire world yearns for growth. And I think it's important that our leaders in each of those respective geographies really set forth a game plan intended to ignite growth in their economies. The world needs growth.
You know, recently you said that you are a little bit concerned about approaches that view global growth as a zero-sum game. Can you tell me something about that?
Look, let's rephrase it. I think the world's much better off when we engage in policies that make the pie bigger.
Yeah.
Okay, if we can make the pie bigger, humanity wins. And to be blunt, a country like the United States is going to win in a world with a bigger pie.
Will China win?
China wins in that world also. There's no doubt about it, right? The two economic superpowers of the world win in any state of the world where the pie gets bigger.
Yes. The world is undergoing some kind of paradigm shifting on three dimensions: economically, geopolitically, and technologically. And you are in charge of US Asia. So how do you view this impact from your seat?
So you're absolutely right. If you think about today's time, today's news that you hear every day, you see the markets move, you see the currencies move, you see the interest rates moves. It is not an easy time. But what is relevant in these times is always to think about diversification. One of the things that we at UBS are very focused on is advising our clients to construct better investment portfolios, to think about where and how you should invest. And investing should be more diverse, because in such a world of uncertainty, you cannot just make one bet or one investment. You cannot put all your eggs in one basket, so to say. If you look at Hang Seng Index, one of the best performing indexes, and equally the German DAX being one of the well-performing indices from an equity markets perspective.
Yeah.
Coming into this year, not many people thought of such outperformance of these indices. So again, it goes to diversification is key. You need to think in scenarios. In a world that is changing so rapidly.
When it comes to the US stock market, should the investors buy the dip?
So we continue to be constructive on the US. We believe that there is upside potential. But again, we would take a very diversified approach to investing. We would not just basically say, go long in one specific market. It is really, really thinking about how to invest in a very balanced way.
Particularly in the US, what markets don't like is lack of clarity.
I think we're at peak uncertainty right now.
And investing should be more diverse. Because in such a world of uncertainty.
So let's talk something about China. You know, we have seen a rally in Chinese assets recently. So what do you think are the key takeaways for investors? The President Trump now is implementing tariff globally and shocking the market on a daily basis almost. So when it comes to Asia, the area you are in charge, what is the biggest market challenge in this part of the world?
I think the market challenge in Asia is very similar to wherever you are right now. It is your initial question when we started this conversation. It is the global uncertainty. As you think about these scenarios, you need to think about what in Asia is working, where do you see continued momentum, like technology, like some of the new news we've seen. BYD coming out with the 5-minute recharging battery was quite groundbreaking, right? But again, there's not only one game in town. We always need to think about diversification.
Our premier said this morning that he hopes the global executives to capture China's renewed momentum on innovation. We also talked something about the rally in Hong Kong market, especially the tech index. Do you see that it's a process of revaluation of Chinese assets?
So if you look at the tech index, as you mentioned, it's up more than 36% year to date. So absolutely, we've seen a revaluation and more, for lack of a better word, umph in the entire technological perspective towards China and Chinese entities and companies that are bringing out technology. If you think about AI and DeepSeek, there was a DeepSeek moment in the markets. What is interesting is DeepSeek has existed for some time, right? But it coming out with what it actually showed, and then other entities coming out. BYD just did a very, very large capital markets transaction, which was very successful, and there was quite a lot of interest and demand for it. So yes, I would say there is a bit of a revaluation, and there is definitely a perspective that there's value. And value is always not just absolute, it's also relative. If you look at valuations, US, Europe, Asia, you still see lower valuations in Asia.
Yes.
So I think it's a combination of valuation and perspectives. Again, I think the big and most important thing is predictability of the future to the extent possible, and policy certainty.
The revaluation of the Chinese assets is in progress. Will it continue?
Let's look at relative differences. If you look at the PE or price to earnings ratio in the US, Europe, and in Asia, specifically in terms of some of these companies and the tech index, and you just do the comparison, yes, we've seen a strong rally and an outperformance this year to date, after a long period of decline and not that much excitement. We believe as long as there is policy certainty and continued focus on opening and supporting the economy as much as technological innovation, we do feel that this has more legs.
So during the past year, Chinese economies has experienced dramatic and up and down. So what's your takeaway?
I think a couple things from my perspective. One, I already mentioned that there seems to be more confidence in the Chinese consumer. They seem to be out more dining, spending. That's generally a good sign in terms of outlook, and it really is about the outlook. I think the second thing, though, is, again, a lot of the measures that the government announced in the two sessions help support that growth. You know, one is the GDP growth, and there could be some slowdown to that in the second half if there are potential tariffs from the US, but 5% GDP growth is quite strong. But then more of the broad-based support by the government around monetary and fiscal spending for more of the broad-based consumer, to create that support so the consumer can really continue the rally beyond just the tech piece coming through, kind of the H-share rally. I think that's really encouraging. And as a company that's global with a big aspiration in Asia, at the company level, we're trying to get half of our total earnings globally coming from the Asia region between insurance and wealth. And China is such a big, important part of that, that when we see those signs of the government providing support, it makes us very encouraged in terms of the opportunities here, not just in the short term, but the long term. Asia is a really important market for us, and we have a big business in China and excited about the growth opportunities. And one of the reasons I travel personally to the market is you get a sense for how the economy is doing when you actually come and visit.
Yes.
And so even from last year to this year, for me personally, there seems to be much more energy and vibrancy with the Chinese consumer, which suggests that they have a lot more confidence and maybe they're willing to start spending more.
You know, the DeepSeek frenzy means that it proves to the world that China can provide a very cost-effective alternative to the US models. So does that give a very good reason for the investors to reevaluate the Chinese assets?
I think it does. I think it does two things. One is I think it reinforces that there's innovation in companies that are gonna come up and create investment opportunities that are different from the ones that exist today. And I do think you probably did see a little bit of an undervaluation in companies. I think this has brought it to the forefront, and that's probably why you're seeing some of that appreciation happen.
So let's talk something about China. You know, we have seen a rally in Chinese assets recently. So what do you think are the key takeaways for investors?
Look, I think this goes back to the conversation we had a year ago, which is China is an incredibly innovative and dynamic economy. And we've seen that play out over the course of the last year.
Yes.
And investors are in some sense moving past their fears and embracing the economic growth that they're seeing here in China.
Mm-hmm.
You know, it was just over a year ago was the anxiety over the property market.
Yes.
The government has taken very decisive steps to protect those who have bought real estate in the property market. The government is very clearly trying to increase consumer consumption here in China.
Yeah.
And as the market sees these dynamics play out, it gains confidence.
Yeah.
Gains confidence. And that confidence is being met with these really great stories of innovation, which inspire even more confidence.
Yes.
And before you know it, a rally unfolds before your very eyes.
Yeah, you mentioned DeepSeek moment.
DeepSeek?
Yes.
Yes. Or the remarkable achievements in robotics that we're now seeing.
Humanoid robotics.
Mm-hmm.
Yes. The thing is...
Autonomous vehicles.
Yes. Do you believe that DeepSeek is a very good reason for international investors to reevaluate the Chinese assets?
We spoke literally a year ago about the remarkable degree of innovation that happens in China.
Yeah.
And yet, when you have other forms of uncertainty, people lose sight of the innovation that's taking place.
Mm-hmm. Actually, it is taking place.
It was taking place.
It was taking place.
It was happening. It was happening as we were sitting here a year ago. The innovation that is DeepSeek, or that defines robotics, or that defines EVs and autonomous vehicles, that was all happening.
This is not something accidental.
Right. It's not at all.
Mm-hmm.
But what's happened is, now that some of the other sources of uncertainty have been addressed, the innovation shines through in the minds of the investor, and they embrace that.
I think the big and most important thing is predictability of the future to the extent possible, and policy certainty.
There seems to be much more energy and vibrancy with the Chinese consumer.
China is an incredibly innovative and dynamic economy.
We are in a particularly uncertain time. You are CEO of one of the leading asset managers in the world. So what kind of advice you will tell your clients in this time? What kind of playbook they need? Speaking of AI, over the year, we've seen significant advances, especially here in China. Have your views on the impact of AI changed?
So number one is, I would say that AI has advanced faster than I had expected a year ago. Like, the rate of advancement has been faster than the optimists, I think, even a year ago predicted.
Mm-hmm.
Number two is, we're now seeing uptake in the real economy, whether it's in call centers, whether it's engaged in translation services, whether it's being used in predictive analytics to help make better decisions on maintenance of high-performance equipment. We're seeing the impact of machine learning and generative AI play out at an ever-increasing pace in the real economy.
Mm-hmm.
And with so much capital flowing into this area from venture capitalists and from other investors, we're going to see this continued rate of high innovation in the AI space for the next couple of years.
During the past year, when it comes to AI, what are you most excited about?
I'm excited about the potential it has to increase global productivity, because the world needs growth.
Mm-hmm.
We need growth. And AI is doing something profound. It is changing the mindset of the C-suite.
Mm-hmm.
The CEO, and the chief financial officer, and the chief operating officer are now all talking about, how do I use and embrace technology to make my business more efficient? And that extends well beyond using AI. It's a sea change to once again embracing the power of technology to make one's business far more efficient.
3 months ago, when I was GCC, and your annual event. At that time, the international investors to the Chinese assets, they are more or less in a wait-and-see mode. How about today?
I think there's definitely materially more interest. And you've seen that in action lately in the capital markets and in some of the capital market transactions that we've seen. You have seen international investors come in.
Yes.
So I think that sort of confirms the point that, yes, international investors are coming in, but they're also looking for a continuation of innovation and everything that has started and hopefully will continue.
Mm-hmm. So finally, you are wearing two hats. Regarding the wealth management industry, what are the biggest trends?
I think one of the things generally, and I think this is global phenomenon, technology itself is going to actually change a number of things also in our industry in wealth management. So if you think and you step back and you think about wealth management has been something that typically the very wealthy have been able to consume as a service. The focus has been on the wealthy individuals of this world. Technology, and AI specifically, together with the distributed ledger technology, are actually two elements that we believe will create more access, will make wealth management even more inclusive.
Exactly. We are in a particularly uncertain time. You are CEO of one of the leading asset managers in the world. So what kind of advice you will tell your clients in this time? What kind of playbook they need?
Well, I think there's a couple things. So the first thing is you want to have options for investors in case they want to pivot their portfolio. They want to change markets, countries, or even sectors within a country. So that would be the first stage. The second thing we're seeing, regardless of equity markets, is just, particularly here in Asia, is the demand for income. So the more solutions we can build that are income focused versus equity market focused, trying to meet an income return, it provides a little bit more stability and cash flow to clients during these times of uncertainty. The two other areas we see is that while we're traditionally in traditional equity and fixed income, we also have a range of private asset classes: infrastructure equity, timber, agriculture, private credit, real estate. And we're starting to see, particularly the high net worth investor, starting to allocate more to these, which a little bit more certainty than traditional equity and fixed income.